A frequent conversation that I have with people and a question that they ask me all the time is, should I put my partner on my mortgage? Usually they're saying that they don't want to put their partner on their mortgage, usually because of credit issues. But today I'm going to talk through the pros and cons of putting your partner on your mortgage. I'll be talking you through the things that you should consider before you even start the mortgage application. My name is Anthony Lindsay, and there are questions that everybody asks, and they're around joint mortgages. Should I do a joint mortgage? Should I do a solo mortgage? Remember, if you're going to put someone on the mortgage with you, there might be some limitations that you face. So you might face some limitations due to income. You might face some limitations due to age. Or maybe you're thinking or asking this question because of stamp duty. No matter what your reason is, I'm going to explain to you the pros and cons of putting someone else on your mortgage application. Always remember that your home may be at risk if you don't keep up the repayments on your mortgage. So a lot of people ask me, Anthony, I want to do a mortgage, but I'm not sure if I should put my partner on there. Is it going to impact my income as far as the affordability? Will it impact the type of house I can get? And the answer is always yes. Everything you do on a mortgage application impacts everything else. So you want to speak to a mortgage broker in advance. Sometimes if you're a couple, it may be a obvious answer as far as should you do a joint application. But what if you're just dating? What if one of the people has had a divorce? What if one of the people has poor credit, or you're thinking around the whole idea of stamp duty? These are all the things that we're going to go through. So make sure you watch all the way until the end, because as with everything that is mortgage related, every detail counts, and every additional thing that you add as far as complexity or just quirks are going to affect the type of mortgage and the lender that you can go with. So, why do couples decide to do a mortgage together? So, some people decide to do a mortgage together simply because it will increase their affordability. So, instead of having one income, you have two incomes. Another reason why people might do it is to share the responsibility. So, they're together, they're going to be running a house together. So, they want to make sure that each person is on the mortgage and each person is contributing to the mortgage on an equal basis. Now, this is a good thing and a bad thing, but keep in mind, banks don't go on love or, oh, we have these great feelings about each other. Banks are going to look at the facts. Banks are going to assess the affordability based on various criteria. So, how do lenders really think? If you want to understand how lenders think, you have to understand how mortgages work. So, usually, a mortgage is going to be based on the worst person. So, what I mean by that is if you have two people and one has great credit and the other person has poor credit, then the mortgage application will be based on the person with the poor credit. Another thing, age, and this comes into play a lot. If you're like a lot of couples, like me and my wife, there's a age difference between us. So sometimes there's an age difference, and therefore it's going to impact the application and the type of mortgages you can get. And another thing that people don't always take into account is the employment status. So you may be full time, PAYE, whereas the other person on the application is self employed or recently has gone self employed, or maybe they're a contractor and they're paid through an umbrella. These are all of the things that a lender is going to look at when they're assessing your mortgage application. One of the key things that you want to make sure that you do when you're considering getting a mortgage is speaking to a mortgage broker. Because if you speak to a mortgage broker, they'll be able to help you through all of the different things and the nuances in getting a mortgage before you get started, before you start applying with banks. So, the first thing you should do is make sure you speak to a mortgage broker when you're considering if you should or you shouldn't do a joint application. Sometimes a joint application is going to be great, it's going to work. Sometimes it's not going to work. So, speaking to a mortgage broker, you'll be able to assess that in advance. When adding your partner helps. Now, there are going to be some very obvious reasons why you would probably want to pursue a joint application as opposed to a solo application. So, one of the things that you want to look at is their credit. Do they have good credit? But if they have good credit and a lot of outgoings, then it may not be so good. But if they have good credit, low outgoings, that's going to work well. If they have stable employment. So, as I said before, if they've just started a new job or if they've just started self employment, then that might not be good. But if they have a stable job, have been at that same job for a while, good salary, that's going to be great. Clean financial history and a similar age. So, everything else could fit. So they could have a great job, great income, no outgoings, but maybe they're a little bit older than you are. And remember, the mortgage length, so the overall term of the mortgage, is going to be determined by the oldest person on the application. So keeping that in mind, if you do add someone to the mortgage application and they're considerably older than you, then it may impact things unless you do a joint borrower sole proprietor mortgage and do what they call a dual term, which I have lots of videos on that. So make sure you look through my videos and look at joint borrower sole proprietor. There are other times when it's definitely not going to be a good idea to put somebody else on your mortgage. So it's essentially the opposite of what I said about why you should put someone on the mortgage. So one of the reasons why you're not going to want to put someone on your mortgage is if they have severe credit issues. You don't want them on the mortgage application if they have severe credit issues. So severe credit issues, you might not want to put them on the mortgage. As I said, if they're considerably older than you, so if there's a huge age gap between the two people, the application is usually going to be reviewed based on the oldest person. Another thing is they may have good credit, they may be a similar age, however, they may have a lot of financial commitments. So even if you're making £180,000 a year, if you're spending £170,000 a year, then that's not going to help the application. That's actually going to hurt the application. So you definitely want to avoid that. Other things to consider is recent self-employment. I talk about this a lot and people don't always take this into account. So the difference between being full-time employed and part-time employed and being self-employed is if you're full-time employed with a contract, then the lender views your contract, what's stated on your contract as far as your income, they view that as your income. So there are lenders that will even lend, even if you have a job offer with a nationally recognized company. I need to stress that, a nationally recognized company. So as long as you're starting within the next 3 months, some lenders will view that as your income. If you're getting a promotion at the same job, so you're currently, a supervisor and you get promoted to general manager or whatever, and you're going to get a pay increase, the lenders will take your new income. However, if you've just become self-employed, you're going to have to wait. And the reason why you're going to have to wait is because your self-employment income is based on at least 1 year's SA 302 and tax overview. So a good example that I usually use with people is, let's just say you go self-employed and you have a huge contract with Google. You haven't been paid that money yet. You haven't made that money yet. So the lender's not going to say, yeah, well, Google is going to pay this amount over the course of a year. What the lender wants to see is that you filed your taxes, you've shown them how much you have actually made. So that means if someone has just recently gone self-employed, you're probably not going to want to add them to the application because it will hurt the application because we won't have any way of assessing an income at that point. Bigger income does not always mean a bigger mortgage. So a bigger income does not always mean a bigger mortgage. Many people figure because they earn more, then they're going to be able to afford more. But as I've said, and I say regularly, just because you're making a lot of money, it doesn't mean that that will go towards your affordability when the lender is assessing if you can afford a mortgage or not. They're going to look at your outgoings as well. They're also going to look at the Office of National Statistics as far as how much it should cost to run your household. So it's not just a matter of you saying, well, we don't pay childcare, we don't pay this, and we spend £75 a week on groceries. They're going to look at what the average household made up of two adults and three kids, or two adults and two kids. They're going to look at the averages and they're going to apply those averages to the application. So this is why speaking to a broker, doing an actual assessment where that broker is plugging in real numbers and doing some of the due diligence prior to doing the application, it's going to be really useful. It's going to save you time and it's going to save you a lot of stress, because you're going to be able to know what those things are in advance. And that way you don't have needless credit checks. They're also going to look at future affordability. So if you are approaching retirement, so if you're in a certain amount of years until you retire, so you're approaching retirement quite soon, what the lender is going to look at is not your employment income. They're going to be looking at your retirement income. So do you have a state pension, a private pension? Do you have any investments that are going to be paying out? I have a really good video for people that are over 50 that are looking at either paying off what was an interest only mortgage, or maybe doing later life lending. It's a really popular thing. And later life doesn't mean what it used to mean, because a lot of people are getting on the property ladder a lot later in life. And some people have been divorced, and therefore they may be getting on the property ladder for the second time around. So if you are considering getting a mortgage, speak to a mortgage broker before you decide if you should or if you should not do a joint mortgage application. The questions you should ask first are, do both of us need to be on the mortgage? So if one person is a high earner and you'll be able to get the house that you want and you'll meet the affordability criteria, then it's fine. Maybe you don't need to have both people on the application. You also want to ask, is the credit significantly stronger? Is that person's credit score stronger? Will adding the second person to the application increase the borrowing? Who should own the property, and which lenders will suit those circumstances? Now, these are all things that you may not have considered, and you may not even understand why these things are important, which is why speaking to a broker is going to clarify those things before you move forward. There is something called joint borrower, sole proprietor, which in many cases, when someone comes to me and says, you know what, I don't want to put my spouse on the mortgage, or they say they do, I look at it and say, well, this might be a route for you. So I do have a lot of videos on it, but essentially a joint borrower, sole proprietor mortgage is one where, let's just say you have me and my wife. We do a mortgage together. However, instead of both of us being on the title, only one of us may be on the title, but they would still include the other person's income. Now, this isn't always going to work if you're a married couple, but the reason why I do bring that up is because there's a lot more people who are looking at getting a mortgage together. Maybe they're close friends, maybe they're siblings, maybe they're cousins, or maybe they're just a couple. So they just want to get the mortgage with their partner. And for whatever reason, they don't want the other person to be on the title, or the other person, for whatever reasons, doesn't want to be on the title. These are things that you want to discuss with a mortgage broker. And one of the key things is making sure that you're always open and honest as far as your reasoning behind it. Quite frequently, when people come to me, they'll say, I don't want to put my partner on the mortgage. And I'll say, why? Oh, no reason. And quite often it's just because they're trying to protect the other person's first-time buyer stamp duty discount. And the interesting thing is, quite often when I speak to those people, the discount for the house price that they'll be able to afford by themselves would be like non-existent or nominal if they did have to pay that second home stamp duty anyway. So this is why talking to a broker, understanding the specifics, actually crunching the numbers before you get started is so important, because you don't have to guess. People will come to me and say, well, just give me a ballpark figure, or give me a lot of hypotheticals. I always tell people, well, you don't want me to answer hypotheticals, because then I'm not answering your specific question. So it's better to book a free appointment, We go through all the numbers that I can provide you, not a guess, not an estimate, but an actual validated illustration based on your criteria. So there's a few things that you want to consider if you're thinking about putting someone on a mortgage or not putting them on the mortgage. A few things that you want to think about is some lenders required married people to do joint applications. So it's not even an option whether or not you do a joint application. Will one income be enough? That's the thing that you want to discuss with your broker. What's the real reason that you're considering not adding your partner? And have you thought about joint borrower, sole proprietor? I think the key thing in that is, which a lot of people don't know, some lenders will not allow a married person to do a solo application. So this means if you've decided you definitely don't want the other person on the application, you will be able to find a lender, but you have less choice. In those circumstances where people are maybe trying to protect a first time buyer's stamp duty discount, I always ask them to crunch the numbers because it may be because they're going to a lender that does allow a married person to do a solo application. It may end up being a specialist lender, or it may be a lender that has a higher rate than if you'd just done it together. So that means the mortgage that you do get is at a higher rate, which means every month you're paying a little bit more. The second home that may or may not ever materialize, although you're avoiding that second home stamp duty, the first home you're paying a higher interest rate on anyway. So always be led by math. Don't be led by your emotions, because the math will give you a clearer understanding of what's going to work best, because you can just lay both illustrations out side by side. And that's one of the great things about having the conversation with the mortgage broker, because he'll be able to produce the illustration with just you and produce the illustration with you and your partner. There's a lot of things that you definitely want to consider, and you definitely want to make sure that you speak to a mortgage broker. But the bottom line is this: sometimes it is best to add your partner to your mortgage, but other times it's not. But you don't need to guess. A mortgage broker will be able to show you, and then you can make an informed choice. When getting a mortgage, what you don't want to do is get your advice from TikTok. You don't want to get it from social media. Even though I do these videos and explain things, they're not to give financial advice, legal advice, or tax advice. And it's certainly not to replace speaking to a mortgage broker that will understand your specific needs, your specific circumstances, and can give you specific advice. My name is Anthony Lindsay, and I've been in finance for over 30 years. And one of the things that I do, which might not be unique, but maybe it is, as a mortgage broker, I do not charge any upfront fees. I don't charge to talk to you. I don't charge to talk you through the possibilities and provide the illustration. So when you book an appointment with me, there's no pressure, there's no selling. I'll simply answer your questions and show you why the answer is what it is. If from there you decide to move forward with me, I'll always do things quickly, compliantly, and keep you at the heart of every decision that is made and make sure that you are informed. If you're a first time buyer, you may feel, well, wow, I don't want to pay someone to do a mortgage when I can go straight to my bank. That's one of the biggest mistakes that a lot of people make. Always remember, when you go to a mortgage broker, the broker can find the lender that best suits you. If you go to your bank, and if you do get qualified, they can only offer you their best rate, whereas a mortgage broker can scan the market, find the best lender for your circumstances. So you may feel like you are saving money, but maybe you're not. So always speak to a mortgage broker. As I said, my name is Anthony Lindsay, and I've been in finance for over 30 years. And I say this because it then means that you're not only getting good guidance as far as the mortgage, but I will make sure that you're well positioned when you come up for your remortgage 3 years down the line, 5 years down the line. We're not just going to get you across the line for this mortgage and then make you what's called a mortgage prisoner. Check out my video about mortgage prisoners, because I do find that a lot of people, they may get a mortgage, they're paying it fine, but when it comes time to remortgage, because the first mortgage wasn't done in a way that they were thinking about the remortgage, that person is trapped with that lender. We don't want that to happen to you. Make sure you subscribe, make sure you like, and please, please, please leave a comment. This is a really small channel. I've tried to invest a lot of time in creating these videos that people can make an informed choice. And by you leaving a comment, liking, and subscribing, it tells the YouTube algorithm that the stuff that I'm doing is useful. If there's a topic you'd like for me to discuss, or if you have a question, feel free to reach out to me. When you reach out to me, you're not going to get through to a VA or a PA. You'll get through directly to me, and I am fast, I am compliant, and I do my very best to make sure that everything that I do is done in a way that you clearly understand it. Thank you for watching all the way till the end. Make sure you click that subscribe and make sure that you share this video with friends and family who want to know more about finance, mortgages, and also just want to make sure that they improve their financial literacy.